Good morning, traders. Welcome to another edition of Technical Talk. Today is Monday, the 21st of March, and time is now 8:46 a.m. GMT. Okay, so as we step into the final full week of March, last week was certainly an interesting one. The conflict between Russia and the Ukraine remains front and center as the invasion makes its way into its fourth week. Therefore, developments surrounding the geopolitical issues between the two countries will remain under the spotlight for many traders this week. The recent headlines surrounding peace talks elevated global equities last week. For anyone watching the equity space, you would have likely recalled Japan's Nikkei 225 advanced nearly 7%, with the UK's FTSE rising 3.5%, and Germany's DAX up more than 5.5%. You know, stateside, the S&P 500 rose more than 6% last week, and the Nasdaq Composite rallied an eye-watering 8.2%. This, of course, led the CBOE's volatility index 22% lower to within a stone's throw of the widely watched 20 level. Also, in terms of WTI and Brent oil markets, they remained volatile, but they closed the week north of $100 a barrel. So going forward, as well as monitoring the ongoing developments between Russia and the Ukraine, in addition to the Federal Reserve Chair Jerome Powell taking the stage today, scheduled to speak at 4 p.m. as you can see on the calendar, 4 p.m. Powell is also up again on Wednesday, and this comes in at midday GMT. These are two key notes for the week ahead. Another key watch, of course, is Thursday's NATO Emergency Summit in Brussels. This will be watched by the financial markets. Look, other key economic indicators worth noting this week. Tuesday, we have RBA Gov Low speaking, ECB President Lagarde speaking, and the S&B Chairman Jordan takes the stage. This is at 3:30 a.m., 1:15 p.m. and 3:15 p.m. on Tuesday. Now, as we head into Wednesday, of course, UK CPI year on year takes the spotlight at 7 a.m. Then we have the BOE Gov Bailey speaking at midday alongside Fed Chair Powell's speaking. We also have the UK's annual budget release to contend with. Following this at 2:30 p.m., we have crude oil inventories, and then we have FOMC member Bullard speaking at 7 p.m. Now, Thursday, we have French, German, Eurozone, UK, and US flash manufacturing and services PMIs on the calendar. We also have the S&B monetary policy assessment and policy rate decision, followed by a press conference, and this is between 8:30 a.m. and 9:30 a.m. Also, in terms of durable goods, we have durable goods orders out for the month-on-month out of the US, and the core durable goods orders are reading at 12:30 p.m. on Thursday. Following this, Friday, relatively quiet one for Friday. We have UK retail sales at month-on-month at 7 a.m. 2 hours later, we have German IFO business climate, and then to round off the week at 2 p.m., we have the US revised UOM consumer sentiment. Okay, in terms of where we are in the markets this morning, Asia equity indexes, you know, they closed lower. Remember, Japan's Nikkei 225 is closed. But so the Kospi, so South Korea's Kospi closed down 0.8%. Australia's ASX 200 was down 0.2%. As of current trade, the European equity indexes are higher across the board. You know, the FTSE 100 is up by 0.5%. The Germany's DAX is up by 0.1%. And Eurostoxx 50 is up by 0.1%. Now, in terms of index equity futures, we are actually lower right now. Dow Jones is down by Dow Jones futures is down by 0.2%. The S&P 500, futures is largely flat right now, and the Nasdaq 100 futures is down by 0.3%. Now, in terms of where we are in the major cryptocurrency markets, we have the Aussie dollar down by 0.3%. This is a notable laggard for early trading, and we're pretty much muted across the board, aside from the Aussie dollar trading lower right now. So in terms of the US dollar index, we don't really see much to go on there. Let me just check the chart. Yeah, we're basically flat on the US dollar index for now. Okay, so there was another, just really quickly, in terms of the US equity indexes, I wanted to point this out. We did have just bear with me, we do have death crosses on all of the major US equity indexes. As you can see here, we have on the Dow Jones Industrial Average, the S&P 500, and of course the NASDAQ 100 and the NASDAQ Composite. So they're all death crosses, which implies that the longer term trend, the trend could form into more of a longer term bearish market. As you can see, that we have clear. So just to add some light to what a death cross is, it's simply the 50-day simple moving average crossing below the 200-day simple moving average. As you can see, this has occurred on all four markets now. But last week we did see a considerable up move, which has led the NASDAQ 100 back to its 50-day simple moving average. Look, on the Dow, we are now above the 50-day simple moving average and on the doorstep of the 200-day simple moving average. Similar scenario to the S&P 500. And look, for the NASDAQ Composite, we are also on the testing the 50-day simple moving average. I just really wanted to highlight this these charts. So on to the euro dollar. Now, last week we did get a just bear with me a minute. We did get a relatively strong move to the upside, but look, the weekly time frame does point to further weakness according to the trend. As such, the area between weekly resistance at 1174, this is the weekly time frame, guys, 1174 resistance will be a keynote, or is a keynote for me. On the daily time frame, we can also see daily resistance at 1224. Almost sheltering this weekly resistance. So between 1224 and 1174, we have a resistance area to be aware of, and which could draw bearish interest should this zone be tested. This is all due to the current trend to the downside. Now, in terms of a shorter term perspective, recognizing that we do have space to move higher on the bigger picture, although albeit not much, but we do have space to move higher until 1174. I am still looking at the 110 figure on the H1 time frame. Now, why am I looking at the 110 figure? Is simply because it's not only is it a widely watched psychological level, but below here, between 0.971 and 0.992, we have Fibonacci support, in addition to a Quasimodo support coming in at 0.983. Now, this yellow area is strategically positioned below the 110 figure to help facilitate what's known as a stop run. So should price drop from here and retest and test the 110 figure, now 110 is going to be a widely watched number in this market. Should we test this number? It's highly likely that we are going to whipsaw below this level into this area of support and potentially bounce higher. Now, why do I have confidence in this area? It's simply because the ascending channel support on the H4 time frame does actually intersect with this area. So we have additional support from the H4 time frame, in addition to the obviously the weekly time frame and daily time frame showing scope for further upside in the short term. So a drop below to 110, I do expect a bounce from this area. How much of a bounce is difficult to judge, but should according to chart studies, we could potentially be heading above the 111 handle on the euro dollar should we retest this area. Okay, moving over to the Aussie dollar. Now, weekly resistance at 75.01 and prime resistance at 78.49, 75.99 are key levels for me. We are still, although it does appear we are in an uptrend, I suppose we could say we are in an uptrend and this is a correction. But if you look at the overall primary trend, we are still lower. And you know, although this may appear a correction, which has clearly attracted dip buyers within this prime support at 69.48, 72.42. I'm a little bit concerned that further buying may be questionable because of the because of the trend and these clear resistances at 75.01 and the prime resistance. And you know, given that the trend is facing lower, you know, of course we could still break out to the upside. Of course, that's still a possibility, but according to my analysis, we are looking at a possible reaction from these resistances on the weekly time frame. Now, in terms of the daily time frame, as you can see, we are testing a trend line resistance. As you can see, the sellers are coming in off of this area as we speak. Now, should we correct lower from this point? We do have the 200-day simple moving average at 72.99. Now, mean reversion in financial theory, you know, after an extreme move, this is not an extreme move, but after a move above the moving average, prices do tend to return back to average levels. So this is the 200-day simple moving average. So it's an average of the prior 200 days, 200-day closing prices. So we could see a reversion to the mean from this trend line resistance now. But if we do cross above this trend line resistance on the daily time frame, what this does is this adds additional weight to the possibility of reaching this resistance on the weekly time frame at 75.01, followed by a possible run to the pattern profit objective derived from the double bottom pattern around the 69.97-ish region. Now, do note that this pattern profit objective comes in at 76.60, which is actually located within this prime resistance on the weekly time frame at 78.49, as I said, 75.99. Now, on to the shorter term time frames. We have the H4 chart. You know, we have Quasimodo resistance at 74.51, calling for attention to the upside. And we also have a Quasimodo resistance turn support at 73.49, calling for attention to the downside. Should, you know, this is a level that really stands out to me. The reason being is because we have formed, if we zoom in, we have formed a higher high. Now, this will get this will encourage buying around this area. So you will see dip buyers coming in from this area. Now, a perfect manipulation play would be a whipsaw below these lows here into this Quasimodo resistance turn support, which is, you know, it's pretty much hidden. Okay, so traders would be looking at this point here to this point here as support. So there will be stops below here. And, you know, if we do come below here, I do expect a reaction to form off of this level. However, should this entails getting past the H1 Quasimodo resistance turn support at 73.62, 73.67. Now, as you can see, we are now below the 74 figure on the H1 time frame. So a test of these levels, a retest of these levels is highly likely. But overall, this is what I'm looking at. So we are now below the 74 handle in conjunction with the daily trend line resistance. So further selling is a possibility in this market in the short term. Yeah, so that's where I am currently on the Aussie dollar. Now, in terms of the dollar yen, look, the primary trend remains north in my opinion. So as you can see, we had a strong up move from 2011 to 2015, and all of this is the secondary correction. Again, this is of course up for debate among technicians. Some will be looking at more nearer term price action to define the primary trend, but I'm choosing the much longer term play here. So look, as you can see, I believe this is a secondary correction here, but the point is the secondary correction is showing strength to the upside within this ascending channel. And this ascending channel comes in between 102.59 and 110.97. Okay. An important point, of course, is price is on the doorstep of a 1.618% Fibonacci projection at 119.77, which is in line with, dovetailing closely with this channel resistance. Okay, and so I've highlighted this area in yellow to be aware of this week. Now, in terms of the daily time frame, we you will note from previous analysis and previous technical talks, I did note that a breakout to the upside would likely see further buying take shape. And as you can see, we have seen further upsides in this market. This is a breakout to the upside of an ascending triangle, which is generally looked at as a continuation pattern. Now, as you can see, we are looking like we are going to connect with this ascending triangle profit objective at 120.11. Now, 120.11 is positioned just above this weekly resistance. So between 120.11 and 119.77 is a resistance area I would be looking at closely this week, should we continue to rally. Now, another point of note, of course, is the RSI, the Relative Strength Index, which offers traders a measure of momentum, so the speed of price change. So as you can see, we are relatively high within overbought conditions, registering about 78 at the moment. Now, this shows that the upside momentum could begin to level off. But in uptrending markets, you know, the RSI can remain within overbought conditions for prolonged periods. So do be aware of that. So just be aware of this. If you see the RSI exit the overbought area, which is traditionally looked at as a bearish signal, just be aware that this may be a false signal and price could continue to rally higher. So pretty basic picture on the short-term time frames right now. H4, I'm looking at the decision point at 120.06, 119.57, and the decision point at 118.17, 118.43. Now on the H1 time frame, we have the 119 level to the downside, which converges with ascending channel support. Look, should price test this area here, this may be a base where buyers are attracted to. This is simply because we have room to move higher on the bigger picture still, although we are close to higher time frame resistance. So a bounce from this area would not surprise, targeting the 119.50 region, followed by a 1.272% Fibonacci expansion at 119.53, which is just below the H4 decision point at 119.57. Now on to the pound dollar. Look, this is an interesting position we're in on the pound dollar. So this is the weekly time frame here and the daily time frame. Now look, on the weekly time frame, we are still in a downtrend, in my opinion, a clear downtrend. The major trend, the primary trend, is lower. And look, again, very similar to, I think it was the Aussie, the Aussie dollar, where we've seen from pandemic lows, we've seen the move to the upside, which could be viewed as a correction or a dip buying opportunity. Very similar to what we're seeing on the pound right now. But given the overall trend is lower, this may not be a dip buying opportunity. This may indeed be, this may in actual fact be a move, a continuation signal, a move that will continue to the downside and ultimately target weekly support at 27.19. Now, look, we are testing the underside of prime resistance at 34.73, 32.03, in line with the overall trend. So look, the point is that we have come back above resistance at 30.82 on the daily time frame. But how far, how much this will be viewed, this will tempt buyers to come into the market is difficult to say, because yeah, although we have room to move higher on the daily time frame to resistance at 33.55, look, the fact that we are in a downtrend and prime resistance on the weekly time frame is in play at 34.73, 32.03, I find it highly unlikely that we are going to see further upside in the pound for now. I really do believe we are heading lower on the pound medium to longer term at the moment. Now, on the short term, we have H4 resistance also in play at 31.94. Now, do note, H4 resistance is converging closely with 32.03, the lower edge of the prime resistance on the weekly time frame. So we have H4 resistance in play, prime resistance on the weekly time frame in play. This leads us on to the H1 time frame. Now, right now, the H1 time frame is fluctuating between the 132 handle and the 131 handle. Now, what's interesting about this chart is what's outside of this range, that's this early range that's forming. So we have Quasimodo resistance at 32.22 and Quasimodo support at 30.75. Now, what I'm looking for is price to potentially whipsaw above 132 to bring in Quasimodo resistance at 32.22. Why am I looking at this type of setup is purely because I know that there will be stop loss orders above this area. I know there will be liquidity in the form of buy stops above this area. And I know that there will be traders looking to fade this buy stop momentum, if you will, from levels like this Quasimodo resistance at 32.22. Now, what's also interesting is, of course, we do have 32.03 on the weekly time frame resistance, and we also have H4 resistance at 31.94 in play. So a whipsaw above here has, it really does. It's really complemented well with the. It's really merging well with the higher time frames. The only caveat, of course, is the daily time frame above support. But given the trend is clearly lower, and we are below the 200-day simple moving average, I do not believe we are heading higher on the pound. I do believe we are heading lower for the time being. An alternative scenario, of course, and this would be against the trend, but more so in line with daily price breaking above this resistance at 30.82, is a whipsaw below this 31 figure into Quasimodo support at 30.75. So we whipsaw below here, take out the sell stops at this point, and then this allows buyers to fade that sell stop momentum and bring and draw prices higher. Okay, so that's really all I have for you guys today. Thank you so much for joining. Thank you so much for listening. Any questions or comments, please feel free to send them over to either support@fpmarkets.com. Alternatively, please do consider sending your suggestions or comments to Market Analyst at fpmarkets.com. Have a wonderful trading week ahead, and I'll catch you bright and early on Monday next week. Thank you so much.